Good Friday morning. Welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Happy New Year. I hope you had a great holiday. Now let's get back to work, crushing it in this market, while at the same time eating healthier, because why not? Here's where my head is at on January 2nd, 2026. And of course, that is tech stocks. Tech stocks are picking up where they left off in 2025. And why are we even surprised by this on the first trading day of the new year? Companies like Nvidia and Microsoft are likely to deliver another big year of profits at the hands of the AI revolution. What money manager wants to miss out on a potential year of double-digit gains for the Mag 7 after a 25% advance for this group last year? None of them do, I assure you. Retail investors don't want to miss out either. Hence, they are inclined to ride momentum. Not to be the bad guy a la Al Pacino and Scarface, but the optimism on tech stocks will have to be justified right out of the gate this year. Here are three things I'm looking out for in tech over the next 6 weeks. All of these, I would argue, have to go perfectly to keep the bulls happy on tech. I want to hear an even more bullish Nvidia CEO Jensen Huang during his CES keynote on Monday, and I need that backed up by more bullish notes from analysts after they meet with Jensen at various dinners at CES. I don't want to see any valuation-based downgrades on top tech names into earnings season. Don't want to see it. I think it's important the street defends its bullish tech calls, even if it means getting comfortable with higher valuation frameworks. And three, it would be nice if insider selling by top tech execs cools down a little. Execs at mega-cap tech companies accounted for an outsized share of insider selling in 2025 as billionaire founders, CEOs, and directors took more than $16 billion off the table, according to new research from Bloomberg. The largest sale came from Amazon founder Jeff Bezos. He sold 25 million shares that netted him $5.7 billion. A lot of the selling is pre-scheduled, but it still doesn't send a great signal to investors. Here in the Opening Bid Roundtable, Yahoo Finance Senior Reporter Ines Ferre, Dana Dioria, Envestnet Solutions Co-CIO and Group President, and Ben Emons, FedWatch Advisors Chief Investment Officer and Founder. Good to see you all. Dana, I'm going to come out with you here. How important is it that everything goes perfectly for tech stocks here?
I'm inclined to agree with you. I mean, you opened with, not surprising, and you're absolutely right. It's not surprising. We've had a 2025 just AI is the dominant theme. It superseded the tariffs. It superseded geopolitical concerns. It supersedes the fact that, the economy is doing fantastically well compared with what it could be. But we do have some cracks showing in labor. It's not clear that we've defeated inflation, and yet this AI theme just powers us forward. So no shock, no surprise that we enter 2026 the way we are. But I agree with you. We did start to see the market say, hey, look, we need to know that this is actually going to pay off sometime. We did start to see that, you're going to debt markets now to fund some of this AI spending. That's not the same as, paying it out of cash flow. And debt holders are going to expect, kind of some deliverables, right? And so I think 2026 needs to be a year that we see the productivity increases from AI, not just the creators of the tools for AI, but the actual consumers showing productivity gains from AI.
Ben, would perfect even be enough? So if we hear from Jensen Huang on Monday at CES, he says demand is crushing it. We're going to have a great year. The AI revolution, it's coming in hot. It's going to be amazing. Would that even be enough?
Yeah, that's a challenge, Brian, because, I think a lot of people are paying attention to NVIDIA's, valuation and trying to extrapolate out now, not just anymore 2026, which, was always seen as a year where this forward multiple being lower for 26 was sort of the implied growth rate and turn. We're now in this year, and looking at the next 2-3 years, will that be sustained? So what he says on Monday matters, no question, and matters to the bull tech, or the tech bulls out of their calls, as you said earlier. But I think these expectations are really to the perfection, so to speak, like price for perfection. And I think there's where the sensitivity may be against a backdrop of an economy that may grow really fast this year because of investment, but there's also a lot of geopolitical developments happening around us. And then we're dealing with a market that's a little fragile because of liquidity. And I think that matters too, that particularly with tech and liquidity seems to be tightly correlated.
And as I love these insider selling stories, you start off first two paragraphs, you get all this, the numbers, the big numbers on the stock sales, and then you go halfway down. It said they were all pre-scheduled. Now, I don't care. The stocks were still sold by really rich people, and that should still be a negative signal to the average investor out there.
I mean, it should, but you have to keep in mind also we have seen these stocks at all-time highs, and as you mentioned, they are pre-scheduled. So as far as though sentiment for, hey, why are you selling this stock if you're expecting this AI theme to continue on and on? Yes, I get your point on that. I also think though that, you know, when in your opening commentary, basically talking about these players, I agree that they have to move forward in a perfect way. And Jensen Huang is going to have to knock it out of the park because he is the AI vision. He is synonymous with the AI vision in general. So his commentary will have to be gangbuster, blockbuster, because this is what the street is expecting for the rest of the AI trade to work.
Dana, has the AI trade completely detached from the economy? And I bring this up because last year, the economy, it grew okay. It wasn't gangbusters, and AI still had a rocking year. The stocks did well. Can that happen again if the economy continues to grow at the pace it has been growing?
Well, I think, you know, you're hearing it in all the comments. I think this is forward growth getting pulled here, you know, to existing returns, and we have to make good on that, right? So the expectation of growth in the future is what's powering this, and which is, you know, the kind of the definition of growth stock, right? It's, hey, look, I'm going to pay high multiples with the understanding that this is all going to pay off in the future sometime down the line, and so we're just living off of that, right? And to your point, it's not really related to the existing what's going on in the economy in this moment, right? It's not, we again, like, we haven't seen AI have massive productivity increase. Now there's some signs, right? Certainly the fact that the labor market, we're not seeing the hiring, right? We're not seeing the firing, but we're not seeing the hiring. So you're starting to have some question, well, is this AI? Is this AI taking root? Are we seeing the beginnings of this story starting to pan out? But until you can really show that AI is actually improving the economy as a whole, the companies that are consuming it, I don't think you can say. I think you're right. It's detached, but it's detached in the way that a growth stock is detached. We're all, you know, expecting this future growth to come, and the question is not only will it come, but when will it come, right? I mean, there are plenty of fantastic industries, fantastic innovations that do a lot for mankind, but, you know, in terms of how you make money on it in the stock market, it's not as straightforward, right? You know, you might have to sit with it longer than you expected and may not be able to.
Ben, how optimistic are you on the labor market this year?
Well, you could have some level of optimism in terms of that if the economy that shows traction in the third quarter and that somewhat continues, driven by investment, which I would say there's now some evidence that AI investment is happening. There's a lot of pent-up investment too. And as the other panelists said, like this productivity gains, then you could see some improvement, meaning the trend in jobless claims is showing this already. Some of the improvement in the ADP data is there too. And then there's outlook data from ISM and PMI data on the jobs market itself, or what supply chain folks thinking about hiring, that's picking up too. So there's, I think, possibility that we're going to turn a little bit of corner on labor, but it's not going to be material enough to say like, wow, this is going to be this booming jobs market that we saw, say, in 2021 or so, simply because productivity in itself, you know, limits the amount of hiring. Right? There's fewer people doing more work. So I do think that does play a role as well. So labor is going to be, I don't think the big risk to the economy itself. It's more, I think, inflation and investment, how that plays out. But ultimately, you know, labor does drive what the economy will do, spending. So I think that really matters. So labor remains a key factor.
Ines, this past Saturday was the first time that I got concerned about the job impact or the labor impact from AI. So I called up Sirius. I had to get my car radio fixed. They're always a pleasure to work with. Some AI bot introduces themselves. They're called Harmony. They walked me through the whole process. And I came away thinking like, wow, this person actually sounded like a human, Ines.
Look, I mean, I spent yesterday on Manus AI, the company that Meta just acquired. And I will tell you, it made a website for my daughter. I asked it to make a website in 5 minutes. So
that's amazing.
This will have, it's insane. I mean, this will have an impact on the labor market, because back in the day, you would call up a web developer and say, can you do this website for me? So We can't really kind of fathom the productivity that is going to come from this, but I do think that this year you will see that productivity will be a word of the year, because companies may start to understand, well, why are we paying $100,000 for this person to do their job when we can have AI do it better? So part of the reason why you're seeing Wall Street bullish on the stock market is because margin growth, because revenue growth, because AI will be more productive for these companies. These companies will figure out how to become more productive using AI.
Ben, for the first half of this year, how many rate cuts do you think we get, and why?
Yeah, it could be 1 to 2 cuts, Brian, but this obviously very depends on how the Fed chair sequence plays out. I think that's a major influence, really, because with the economies right now, a lot of these Fed members have again signaled that they may like to stay on hold for a few months, but yet the influence on the Fed rate setting will be significant, right? One of the most consequential events for this year will be the announcement of the new Fed chair, and that's really different than anything that we've seen in history, because the way it's been positioned of the expectation that rates have to be slashed down, right, as a part of the job description. So I think we could see 1 or 2 rate cuts, but to that discussion about labor, it is driven by that picture. Like if labor continues to deteriorate faster than anyone had anticipated, Fed will step in. But if not, you're going to get this political influence. I think that plays a big role this year.
Dana, when we get that information on who the next Fed chief will be, it's supposed to come reportedly in a few weeks out of the gate here. What do you do? And how does that Fed pick change, or maybe it doesn't? How does it change how you go about thinking about investments for the balance of the year?
Well, I agree with Ben. I mean, I think obviously this is a highly politicized appointment at this point. I think, the concern here is how bad does the reaction have to be? I mean, you could still land in an okay place, right? We could still land in a place where rate cuts are needed. We get the rate cuts that we need, we move forward, and, it sort of pans out the way it should and could. However, there's obviously the prospect that you get rate cuts that aren't indicated by the data, that the data starts to, inflation creeps back up, and even with a bad employment picture, you could be looking at stagflation at that point. I think nobody at the Fed lets this go forever, right? Because obviously this is bad for the economy. It's bad for exactly what you're trying to do, which is goose the economy, goose the market. So eventually that does get reined in. So the open question becomes, does it go too far? Does the punch bowl, as you will, sit out there at the party a little too long? And do we get, some bad consequences as a result of that? And I don't think you're going to know that from the appointment. I think the appointment will lean dovish. There's just no question. But you don't know how it's going to pan out until you know what happens with the actual data.
A big thanks to Ines, Dana, and Ben for bringing in the new year with me. Thank you so much. All right, coming up, Delta Airlines is going into its 101st year in business. Wow. I got some wisdom from longtime Delta CEO Ed Bastian. That's next. Past 12 months for airlines have been filled with turbulence. From the government shutdown to dealing with outdated infrastructure and peak demand, airlines have endured it all and then some. I spoke with longtime Delta Airlines CEO Ed Bastian in November at Yahoo Finance Invest. He gave his insights on the strength of the consumer and being the first airline to reach 100 years in business.
A lot of pride in our people for getting there. First U.S. airline to reach 100. It's quite a statement when you think about all the challenges our industry faces, the hundreds of airlines that have come and gone. To have Delta reach not just the mark first, but the first to the second century of flight, and the head start that gives us on our future. But it's about people. It's about service. There's something about Delta that's in our heart. It's in our DNA. It's the consistency of excellence that we look to provide. We have great planes. We have great technologies. We have great lounges. We have great places we go. But it's the people that really make it special.
I want to dive into all that in large part because I am a loyal Delta flyer. I am, and I'm just fascinated by the travel experience. But you mentioned challenges, and the aviation industry has been undergoing some challenges with the government shutdown. At a high level, what disruption has this caused for a business like yours?
It's been very disruptive. For the last week, when you go in with no notice and you just arbitrarily reduce the amount of flying in the system for all of us, incredibly disruptive for our customers. We had no advance warning to be able to get people to different places, so there were delays. When you couple that with the amount of the accelerated pace of staffing shortages in the towers, which I think was somewhat tied to what we were seeing with the force reductions. Controllers are, and by the way, hats off to them, particularly those that have been working without pay for almost a month and a half. Really, really big thanks and security agents that are doing that. But the reality is that there was stress, there was strain. It was completely unnecessary into the system. It's our industry that forces, I guess, even government to get back together and to open up. So be it. But it's causing a pretty significant disruptive end. The good news is that I anticipate we'll be fully up flying very, very soon, in the next day or so, and hopefully when the next time comes, we'll find a better solution.
Hopefully there is no next time with this.
But there always is.
Yeah.
But hopefully it's not our industry and our people and our customers that have to bear the brunt of the dysfunction, because the people that we put in power to run the country can't agree.
What this has exposed, this record-setting shutdown, Ed, is, like you mentioned, the shortage of critical people that allow planes to safely go in the air, the aging infrastructure. From your vantage point, how severe are these issues?
We're safe. We're absolutely safe. The safest form of transportation, period. And that's what we do all day long. We talk a lot about our brand, as I said, the airports and the fancy places we go. Internally, we talk safety all the time. And if you're not seen as safe, if you don't have that core trust element with your consumer, you can't do the things that we do. So incredibly safe. We've been accelerating over the last decade the retirement and the replacement of our fleet. Our fleet actually has gotten younger in the last 10 years. COVID partly helped, but we retired a lot of old planes during COVID, the 777s, the MD-80s, excuse me, the MD-90s, and several other older models. And we haven't had an issue, because we've been with Airbus for the last 5-7 years, getting all the deliveries that we expected. They've been operating right through this period.
What has to happen to get more air traffic controllers into these spots to backfill positions that maybe aren't being backfilled?
Well, one of the most important things is to modernize the skies. The air traffic control systems were developed decades ago, 50, 60, 70 years ago, still using some of the same technologies, the same infrastructure, very manual. And when you have an environment that's so stressful, that operates with such manual intensity, it's safe. But it's safe because things get slowed and they maintain a big margin for error to keep us all safe, which we appreciate. But the reality on that is today it takes longer to fly from Atlanta to New York than it did in the 1950s when we launched that route.
It's hard to even grasp.
It's hard to grasp, but that's because the system is so taxed and so it's so slow. So you do circles, you wait in lines, and you don't have the modern technologies that we use in many other transportation industries. By the way, many other air traffic systems around the world have much better technology than we do in our states. Kudos to the administration. They got $12 billion investment to get started this year. Again, it was another thing that probably was delayed during this shutdown period, and we got to get it going again. But we all need to make that investment, and that's just a down payment. I think the real cost is going to be significantly better. I don't know of a better return that you can have, because just think about how much time it's going to save being able to use the technology, how much safer it'll be. The elapsed savings that you're going to see in terms of sustainability and fuel and giving people their time back, and then allowing us to grow at a much higher pace than we've been able to grow.
How have your past few weeks look different? When you see a government shutdown, how do you manage your teams differently? How do you manage your people differently?
It's frustrating. It really is. We've had, our business has been doing great. We had earlier issues.
You just had record revenues.
Record revenues this year, but we had earlier issues at the start of the year with all the geopolitical announcements, the tariff debates, the announcements, the uncertainty that existed in the economy really froze the economy. And our business runs on economic growth. And when you have the economy basically stall, which we saw happen in the February, March, April timeframe, brought our bookings down pretty considerably. We got it back up June, July. Things started to take off again. We're looking for, and we will have a great holiday season. Things were looking great. Then all of a sudden you have a shutdown that occurs, something that comes completely out of your control, but out of nowhere. We can't do business like that. We need more, from our government leaders. So we have made our points known with all our people, our elected officials. Do your job. Do your job. And I understand there's disagreements, but it should not come at the cost of asking people to work particularly in high stress, incredibly sensitive areas without pay for weeks on end. That's inexcusable.
Is the consumer okay?
Consumer is strong, but again, it depends what consumer you're talking about. Our consumer in the experience economy, the higher end experience economy, is doing incredibly well. And we've seen this for the last several years. The higher the experience set goes, the more premium it is. The demand, it seems to be insatiable. It just continues to grow. Whether that's international experiences, whether that's a hot concert tour, or last night I was at a great restaurant in the city. It was packed, hard to get a table. That's where people continue to want to invest because they see great value. They see great opportunity. If you're providing a commodity, if you can I can do this, I can do that. If price is your determinant, that consumer isn't doing too well.
Programming note: on Monday, my Opening Bid Unfiltered podcast returns with a special episode with CrowdStrike founder George Kurtz. George and I talked about what drives him as a professional race car driver and why he just spent $300 million to buy a large stake in the Mercedes F1 team. And yes, we of course discussed cybersecurity. You can catch that episode on Yahoo Finance, YouTube, Spotify, Apple Music, and Amazon on Monday morning. Straight ahead, Jared Blickery has you covered on Market Catalyst. We'll be right back.